In this video, we're going to take a brief look at timing and the importance it plays in your trading. I have a free trading course that you can join. It's 13 videos covering 10 different topics designed to show you why you're not winning and how you can turn your results around. So once you finish this video, be sure to head over there and sign up. Hello everyone and welcome back to the channel. Today I'm going to take a look at timing in the markets and give you an interesting tip and a very important tip if you are a day trader. Now for swing traders, you don't really need to worry about this so much. If you're trading high time frames, you don't really need to know about timing in the markets on a day-to-day basis. You can simply trade the overall flow of the market. However, if you are a day trader or an aspiring day trader and you don't use timing and you don't know the significance of timing, then you really need to pick up on this. So what I'm going to do is go through the different sessions, explain to you what I mean when I say timing, and show you a few different characteristics that I've picked up on myself in my trading. So the first thing I wanted to cover is that timing really does matter. And one of the key reasons that timing matters in the market is because volume spikes at certain times of the day. What we have here on the chart is an indicator that shows us the different sessions. So this is the major volume area of Asia session. This is the major volume area of London session. And this is the major volume area of New York session. Now we can see by looking at a few days, not every single day, but a lot of the days, we get a pickup in volume around the open of New York and around the open of London session. So we can see here at the start of London session, we have a big drive down. We can also see here at the start of New York, we have this big drive down. Same again here, we get this big drive in London and quite a nice drive in New York. Once again here, a little bit of a drive there, not too big this day, but a big drive into New York session. Same here, big drive into New York, big drive into London here. And then here we have a drive into London and a big drive into New York. So we can see this is a repeated pattern, right? When we understand timing, we can use this to our advantage by timing our sessions and our trading strategies around specific times of the market. For example, if you're based in the UK, you may want to build a strategy around the London Open. So maybe you'd look for drives in the London Open. If you're a New York trader, you can look for those drives into New York. So we need to make sure that we're trading with the volume to avoid sitting through the slow periods like this. For example, we don't really want to be trading into the Asia session if we're focused on pound and US dollar pairs or euro pairs, anything like that. If we're trading these pairs, majors, we want to trade them through London and New York. And we should really be looking at that prime time around London Open or around New York Open to actually nail these big trades. So the second tip for you is that sessions do have characteristics. All it takes is a simple look at a chart and you will pick up on the characteristics for the pairs that you trade. Now, I can only speak on a few. I can only speak on pound and euro based pairs because that's all I trade. But if you are, for example, trading the New Zealand dollar, the Australian dollar, the Japanese yen, anything like this, all you need to do is attach an indicator like this that shows you the sessions on the chart. And what you can do is actually then just see what happens in Asia session, what happens in London, what happens in New York on a regular basis, and what patterns can you actually pick up on to take advantage of when you're trading. So we're looking at GBP USD right now, and I'll show you some of the characteristics that I've picked up on. And you may see this very clearly. It may take you a little bit of time to actually pick up on what's happening in the markets on a regular basis. From looking at this, what can we see? Well, we can see most days, Asia is a small consolidation box. So on Asia session, really, if we're trading GBP USD, Euro USD, Euro GBP, anything like that, we don't want to trade Asia session. If you are set in the Asia Pacific time zone, I would just recommend not trading these pairs unless you're going to trade late in the evening when we're moving into London for your time frame. I would say instead look at different currencies focused around the Asia Pacific time zone, such as the Australian dollar, the New Zealand dollar, the Japanese yen. These pairs are going to have more volume in Asia session, so I would say focus on those. But if you are based in Europe or America, you can actually look at focusing on London and New York sessions, and you don't really need to worry too much about what's happening in Asia. But that's the first characteristic. Asia normally doesn't make much movement, so therefore Asia session is not going to be one to trade. You can look at every blue box here and you see they're much smaller than the others, and generally they just trade sideways, opening and closing around the same points, therefore not being the most appealing or enticing or the best to trade. Now, if we look at London, however, we can see that pretty much every day, not every single day, but pretty much every day, London has a nice push. So after the Asia consolidation, we get a push in London. Asia consolidation, push in London, push in London. Here we can see continually, we get this nice drive of volume in the London sessions. So we go a bit slow around these points, but once again, continuations, a bit slow there. Push in London, push in London. push in London, push in London. You can see this continually. And this is how easy it is to pick up on session characteristics. All you need to do is literally glance over your charts with an indicator like this and see what characteristics you can pick up in the market. Now, aside from a push in London, another big characteristic is a reversal into New York. So if we look at the price action of the markets, we'll realize that into the open of New York session, we very often get a reversal. So if we start it from this point, we get this push in London. When New York session opens, we get a large drive in the opposite direction. Here we have this push in London, then we get the New York reversal, push in London, New York reversal. This one, not so much, but back here again, push in London, New York reversal, London push down then up, open New York, we get reversal down, okay? So you can continually see New York forms reversals. So if you are trading on a day-to-day basis and you are trading into London, how can you use this? Well, we know that London session is going to give us a push. If you are a London-based trader, you could just trade that push. If you want to trade New York session instead, you could look for reversals around the New York Open. And if you are trading the London, how can this benefit you? Well, you know to probably get out of your trades when we start to open into New York session, because we are likely to get a reversal, right? If you're buying, you can catch your movement from here to here, and then you may want to just dive out of the trade and get out before that reversal flips on you. So if you're trading down, for example, New York opens, get out the trades because it may flip on you. And you can see that that was probably going to save you a lot of money if you do that, because, pretty much every push that we get in London is followed by a reversal into New York. So how can we use these session characteristics to our advantage? Well, what I'm going to do is actually show you just an example, random example. I'll dig in and find one of potentially, a trade into London Open and then a trade into the New York reversal, and show you how you kind of build your strategy around timing. Now, it may seem strange to you if you don't do this already, but timing has a massive effect on your trades and it plays a massive role in the market, much bigger than you may anticipate right now. So if you do begin to incorporate timing into your trades, you are 100% going to get much better performance out of your trades in the long run. Here's a little example of how you can use the timing in your trading to get better results. Let's assume your trading is built around liquidity, structure, and supply and demand, right? Let's say we're a London session trader, and that's where we want to build our strategy. This is how we can actually use that volume in our favor to catch good trades, and how we can also use characteristics of other sessions to know when to get out. So what we can see here is basically liquidity has just been taken on the higher time frame basis, and now we are entering into the London session around 7 a.m, moving into 8 a.m. UK time, which is where we'll be getting that volume pickup. So what we would be doing now is actually scoping setups. Now we can see here we've had this move down with a small structure point in the middle. We've broken above that structure point now, and what we could be looking for is potentially a push to the upside from here as we move into the London Open. So allowing the market to make a little bit of a movement, we can see here that we've came up, broke structure, came down, made this higher low, and then pushed to the upside. What we could be doing now is looking for some form of buys. So if we were looking in this area, for example, for buys, what we could do is place our orders in here, stops below, and actually look to target some open supply above. Okay, so this could be a standard trade to you, dependent on your strategy. Obviously, this is an example. You may trade differently, but you'll see how the volume coming in actually, helps us out on this trade. So if we were to place our order on the zone, the market would tap us in. We are now in the position, and then the market will begin to move to the upside. And this move up actually catches that London Open volume. So if you look at the timing here, London opened here where we first got that push. Then we got the pullback, the tap in, and now we're getting a push away. And we're actually just riding that momentum of the London session. Now, in this instance, our trade would have hit take profits. If we were to hold a larger take profit, though, for example, what we would be looking to do is actually getting out of this trade as we move into the New York session. So if we hadn't already taken profits, what we would do is simply look around the end of the London session here and decide, okay, maybe now is a good time to get out of the position because we're moving into New York. So we could cut the trade around this point. I mean, really, for this trade, this is where we took profits anyway. But just to be safe and just to show you the example, we'd cut the trade around New York Open because we know around New York, we very often get reversals. Now, obviously, you could use that as a trading strategy in itself. For example, we just hit New York Open. There's a supply zone here. If we'd have sold from this point to catch that reversal, we would also have a nice profitable position on the way down as well. But whether or not you would trade the New York session, you would definitely want to be getting out of your buys from London because we know a reversal is likely to come underway. So there's two ways you would use sessions to your favor there. We obviously look to catch the volume into one session, And if we understand the characteristics of other sessions as well, we know safe times to be getting out of positions to avoid letting go of the profits that we've made that day. The moral of this video is simply that timing plays a bigger role than you may think. If you are not incorporating timing into your trading and you are trying to day trade successfully, you are going to have a very hard time doing that. In order to day trade successfully, you need to understand the session characteristics and you need to understand fully how to take advantage of them. So I hope that this brief video has given you some value and some insights into how you can actually begin to take advantage of session characteristics and timing in your trading. If it has helped you, please do drop a like and subscribe. And let me know in the comments if you have already been using timing in your trading or if this is a new one that you're going to incorporate into your work. If you want to learn my full time-based trading systems and learn everything there is about different session characteristics, as well as every other aspect of trading, head over to the second link in the description and you can join my trading academy there. You get full access to my course, which includes all of these different modules. You'll get access to my trading community where I share my trades. We have many students who have gone through the ranks and built their own success, achieving funding or personal successes with their own accounts after going through the academy. So if you want that, head over to the link in the description and you can join there now. Thanks for watching, thanks for listening, and I hope to see you in the next video.